investing is a marathon, right? If you are 30 today and life expectancy in India is 85, then you're going to be an investor for the next 55 years. You can't manage somebody's money only in one asset class, one product.
You can have the optimization in your processes, but you'll still require somebody who says, okay, you can invest here.
Yeah.
And then people will have the faith to do that.
The difference between a FMCG supermarket and a financial supermarket is that if you walk into a FMCG supermarket, you know what you want to buy,
Yes.
let's say.
Start behaving like a wealth manager rather than just an agent for a product.
Yeah.
So this could become a reality. Hi, welcome to the episode of Funds India on Tap. Today we are sitting down with Manish, the CEO of FundsIndia. He has spent 20 plus years in the wealth industry and is currently building the B2B business for FundsIndia. Hi, welcome to the podcast, Manish. Good to have you here on a Saturday evening. Let's just say hi to the audience and then get started.
Hi, everyone.
Great. So Manish, first let's understand your journey since you've spent a significant amount of time in a space which is currently evolving and becoming very mainstream in India. Can you tell us how these 20 years have gone by and what all you've been up to?
Yeah. So first of all, thanks for having me as your guest. I mean, when I passed out from MBA, there's internet was a new thing. And so there's no, plan as such. So I landed up with NJ, which was my previous employer by chance. Probably the last person to be placed in my batch. Not a great student, not studious, right? And what really helped was in 2003 when I joined this industry, there are a lot of tailwinds, right? The Sensex from 3,500 or something is today at 77. The industry was very small. So it really helped that we were the first ones to focus on this segment, on this product. Mutual funds had a bad precedent,
Correct.
right? Because of various other things. So right place, right time, probably a lot of luck. And yeah, so that helped. And then, because I like to believe I am good with people, or I have people skills. And this is B2B is purely a people's business, right? You have distributors and, they come from humble backgrounds. So if you know how to talk to them, motivate them, shake them from their comfort zone, that really helps. And that is, it's still needed, but the predominant products which people used to sell, right, that is never easy to
Replace.
put in a new financial product which they've not sold and things like that. But so if you have people skills, a little confidence, and so it helps. So yeah, no rocket science, purely luck, some bit of hard work. Yeah.
Got it. And then how did Funds India happen after NJ?
Yeah, so that also is. I don't have a CV or didn't have a LinkedIn profile, but I was pretty famous in the sense that because NJ is so large, people knew about me, and so they found out, and because I'd spent so much time in the previous company, and once you run out of competition, that's what happens. You get bored. You're sitting at the highest point, and
You want new challenges.
Yeah, and that's boring in the sense that you're just protecting what you built and not building new things, right? So I thought, and they reached out at the right time, I would say. And I asked my wife, because she's the boss at home, and I mean, generally speaking. So she said, yeah, why not? If you're not that old now, we can have one more stint. And so I like to believe that, if you can, one company wonder maybe, luck. But if you do it a couple of times, right, probably that is then, I can say when I retire, if I build this company well, then probably I can say it's not luck.
Yeah.
And that is hard work or talent or whatever. But one could have been called that. So that also was one more thing apart from taking up why I took this challenge. And yeah, it's good days. I mean, building something from scratch, second time around. a lot of learnings, so we can build on that.
True.
Yeah, so it's fun. Yeah.
Got it. And so NJ, all of us know, is a very well established, one of the largest
Yeah.
probably the largest in
Yeah.
India today.
Yeah.
And they are the pioneers of how we see mutual funds being sold today through
Yeah.
partners and wealth
Yeah.
managers. With Funds India, I'm sure there would be some similarities and some differences based on
Yeah.
your learning and experience.
Yeah.
And also the fact that now you're the boss, right? You're the one steering the ship. So how is this different from your personal role and also the way you're approaching things now?
So I think so. When you are not the boss, right? You have colleagues who you can bitch about your bosses with, right? Here I can't do that. I don't have colleagues where I can bitch about the super bosses, and I mean that's a lonely space because the more, I mean you don't have 4 or 5 colleagues which I had and I miss them, but I think so when you have power, you tend to behave well. You live a little more responsibility
Right.
with responsibility, and yeah, it's a added pressure. I would say I was much more freer when I was in the previous company, and here I have to be a little more. So yeah, a little stressful, but I mean I don't enjoy the fact that I don't have to ask people to spend a certain amount of money, or do I have a budget and things like that. Those are things I don't really consider as power. But yeah, to do things which I believe make sense,
Right.
whether it's a product addition or a tech feature, and that really is exciting because you have that power to build what you want to build,
Right.
and the products that you think will do well in the future and things like that. So I enjoy that. I mean, I have that freedom and I like that. But other than apart from that, I think so there are you miss the colleagues, you miss the bitching about bosses, and and less responsibility is always fun. Why we love our childhoods is
Correct.
we had zero responsibilities, right? And as you grow older you get more responsible, and yeah, so it's growing up, I think so. But yeah, it's a different journey now, and I would say it's equally fun.
Got it. So we also come from the same space of investing, right?
Yeah.
We have seen how the last 15 years have shaped up and really built the equity markets for retail investors as we see today. And mutual funds has been a very instrumental product in playing that important role to make it more mainstream. Along with that, so much support from the macro environment and the regulators. For example, AMFI started the whole mutual fund sahi hai campaign, and
Yeah.
that actually took a lot of cost off players who were sort of spending so much to acquire these users. And so the whole wave started, and today's stocks is in the hands of everybody who has a smartphone.
Yeah.
And when you say that you're do you like taking calls and adding more products and bringing in the innovation? What exactly are you focusing on? Is it something beyond what people have seen, or is it more on the way user experience is delivered? Can you shed more light on that?
So I think so. Uh, Financial product popularizing the new ones, right? Is fun. I mean, it's challenging but fun. And there are mutual funds are a great vehicle, I would say, right? For let's say a large part of your money, but they don't serve every need which somebody would have, right? Short term, long term. There are few gaps which mutual funds cannot do, and that's why you need what you do at TAP, or what some AIF might be doing, or what uh, a secured debt platform would be doing. There are a lot of opportunities for other financial product innovation or platforms apart from mutual funds.
Got it.
But yeah, mutual funds can be like a big chunk of your savings, but
Yes.
that's not the only thing. That cannot be the 100% of anybody's wealth. So need to build or add products which really help you manage somebody's entire 100 rupees and not just a large part of that, right?
Yeah.
So you need TAP, or there are a lot of other products that we are looking at,
Yeah.
and that really helps in completing your product bouquet.
Got it.
User experience is again, people will be skeptical when when it's new. People were really skeptical about SIPs, which is now
Yeah.
a household name, right? But if it in 2003, if you'd seen historical SIP returns, it would have been what, negative zero. But that was probably the best time to do lump sum or SIPs, right? So can't just go by history, right? Everybody evolves, everybody learns. So yeah, need more products to complete that entire bouquet of products too, so that you can do justice to somebody's entire wealth and not just some portion of that.
Right, right.
Yeah.
No, I absolutely agree. In fact, a lot of times people ask us ki there is equity and there is crypto and so many more exciting spaces. Why are you building in fixed income, which is literally the least exciting space for anybody? And that's when we actually try to make them understand that, out of the 100 rupees, and if you pick up any retail investor's portfolio, you'll actually see that equities or crypto are such fancy asset classes are only 15-20% of that 100. And the remaining is actually going into these boring asset classes,
Yeah.
which people need
Yeah.
to save and protect the money.
Yeah.
So I completely agree with you that it's about time that this innovation comes in, and it's
No,
good
I
that
think so. If you look at RBI's household savings report, right? That is the biggest chunk is in debt, and if you try to see what percentage of mutual fund industry's debt AUM is retail investors, that would be hardly anything.
correct.
And that is for a reason, right? Mutual fund industry doesn't have credit products, only AAA, G-Secs,
Yes.
and I don't think retail investors will jump ship from a fixed deposit to a debt mutual fund just because somebody, they offer, let's say, 100 basis points more return. I don't think, and if that was going to happen, it would have happened.
Right.
Right. So yeah, it's the biggest, debt is the biggest, one of the biggest asset class in Indian households balance sheet or assets, right? And you need solutions for that. It's I don't know what the numbers are, but I'm sure it's 10 times the entire mutual fund industry's retail AUM.
Absolutely.
Yeah, so we need a lot of products on that side.
Got
It's
it.
boring, but yeah,
It's important.
vital. Yeah,
Yeah.
yeah.
You have spent your entire career in this industry. We would want to understand how things were when you were starting out. How did this shape as the time went by, and how are things standing today? And then what do you see in the future?
I mean, so what has not changed is that there are still a lot of NFOs.
Okay.
Right. So 2003, the NFOs were monthly income plan, MIPs, or hybrid, basically 30% equity. So in 2003, what happened was the markets were one post 2000 crash were at from 6,000 to 3,500, right? But debt had performed. So interest rates fell and debt had double digit returns, and people used to sell a lot of debt funds. So equity was actually not sold. So gradually it started with NFOs, which you still see today. Every month there are 30. So that has not changed.
Okay.
What has changed is probably the whole transaction, which used to happen through a check, through a form, through a offline
Yes.
process, PDCs and things like that. So it's become much more efficient operationally. And because of that, there's a lot of access to anybody who's, let's say, I'm from Dwarka. So if you want to start an SIP in Dwarka in 2003, that would not have been possible, which is now possible. So it has brought a lot of access to people from everywhere in India, whether they have a mutual fund distributor there or not. There will be some platform who can,
Right.
so that is great. I mean, that is why, and it happens in minutes, right? That form used to take physical time, then somebody will process it, and also it has become operationally much more efficient. Uh, NFOs and all of that, I don't know when that will go away. But that is still on, and I think so. There was probably a 2-3 year phase when didn't have NFOs, right? IFAs have become smarter.
Okay.
Definitely, right? A lot of people who initially ignored mutual funds as a business idea had to, start this business at some point in time to stay relevant in their own, whatever they considered their primary field, right? So everybody had to. So because of the sheer performance or the returns which people have got, the experience, right? Everybody is, was forced eventually to focus on mutual funds, to focus on SIPs. And the IFAs have done a fab job of creating awareness, bringing a lot of new investors, handholding them, throughout this journey. And there have been challenges, 2008, 2020. So you need somebody to, help you during the bad times. And
Correct.
I think so. So they have become really smart. They've become a big portion of the market. And yeah, of course, there are tech players who do direct plans and all that. But I still believe IFAs have done a fab job,
Yeah.
and they are probably the most client centric out of all the other players. Yeah.
In fact, what we believe is that wealth in India and finance in general is a very trust driven business.
Yes.
Whenever you talk about money, trust comes first.
Yes.
And therefore, human touch it becomes very important. It's just impossible to replace that with
Yeah.
whatever advancement you
Yeah.
can have. You can have the optimization in your processes, but there you'll still require somebody who says, okay, you can invest here.
Yeah. Yeah.
And then people will have the faith to do that.
You can't. You basically, more than that trust part, I would say, if you want to, let's say, run a 42-kilometer marathon, right, and you currently can't, right, you need a coach.
Correct.
And you'll pay the coach, right, and you'll listen to the coach. He'll ask you to eat the right stuff, wake up at 5 a.m. Basically follow him and follow the instructions. And if you do that well, right, you'll probably run 42 kilometers in, let's say, the next 2-3 years. So investing is a marathon, right? If you are 30 today, if life expectancy in India is 85, then you're going to be an investor for the next 55 years. And so that is a very long time.
Right.
And there'll be a lot of new challenges along the way. So if you don't have somebody who's been there, seen that, or probably more knowledgeable than you are, then you will probably make mistakes. And can ask our parents why you didn't invest in Wipro or Infosys, and they would say one is knowledge or whatever. They didn't have internet or access, but the other thing is they didn't have somebody who knew the power of equity or real estate or whatever, right? So yeah, so you need somebody, because it's a long journey. It's not a like a 1 year, 2 year journey that you can do it on your own. It's not transactional.
Correct. Yeah. On that note, what do you think about Robo-advisory?
I don't know. I've not seen much of that. Some of the things that it can do, objective things, right? I mean, of course, you can automate a lot of data and asset allocation models or fund selection. You can automate a lot of that, right? But what it will not able to do is when you are in a panic or a greed mode, right? The models cannot stop you from making mistakes. Today, if you means that my son, if he's on YouTube for, like, let's say, 8 hours the whole night, it will prompt my son for a couple of times time to go to sleep and take a break and things like that, right? But it will not really, my son can override that and still. So I think you need humans to stop other humans from making mistakes. Systems can't. The reason why you still have police and a lot of security is because systems can play a small part in helping human beings do that. It cannot override that. So I mean, Chat, you can ask Chat GPT whatever you want to ask, but ultimately when it comes down to taking a decision, and especially when the answers can be a perspective and not an objective answer, you need somebody who you can look into their eye and probably get some confidence from that. So you need that. Yeah.
Got it. So basically what you're saying is Robo-advisory is good when the times are good, but to protect the
challenging times,
then maybe they'll not serve the purpose.
Yeah.
Interesting. Any other interesting trends or patterns that you're foreseeing, or early signals or something interesting that's coming in the wealth space in India?
I think so. A lot of people still, so IFAs especially, because I can speak about IFAs. I've worked with them throughout. So they tend to be pretty digital about things, right? Means whenever they were insurance agents, they were like gung ho about insurance. Today, if they are Some of them are not even mutual fund agents; they are SIP agents, right? So they'll just SIP. So they're pretty digital. If they think equity is great, then they'll not look beyond anything else.
Right.
So these are, I think, so that will change,
Okay.
or we want that to change, right? Because you can't manage somebody's money only in one asset class, one product.
Right.
That is wrong from so many angles, right? So that will change, I think. So they'll become. I want them to become multi-product, multi-asset, multi-brand, so that they do the best job with the client's money, right? When you are like only single asset class, equity, only one product, that's probably not good for your customers, I would say,
True.
right? So I think, they will understand. They're smart enough to understand this, but they need somebody like us, which is a platform which makes their life easier in terms of operations, research, which, because there's a, this tyranny of choice, right? 452 PMS licenses, probably 1100 AIFs, 1400 mutual fund schemes. I mean, you need, even IFAs need an advisor. They are advisors to their clients, and they need somebody like
Yes.
us who is like a advisor to them, who
Right.
helps them make the right decision. So that will change. So they will give competition to all the current wealth platforms, not just mutual fund products, for everything else too.
Interesting.
Yeah, so they have to. I see that will happening in the next 5-10 years. Yeah.
On similar lines, so we have predominantly retail investors who are investing with us, and obviously some of them are they do lower ticket sizes, some of them do higher ticket sizes. When we talk to the ones who do higher ticket sizes, an interesting phenomena that has come out is, and some of these people are like newly rich, right? They have made money in the recent times through, let's say, building a business, a tech company, a startup, and the likes. And a very interesting perspective that we've heard from them is their traditional IFA who used to cater to their parents, for example, doesn't understand their needs, because SIPs they can do on their own, but they need somebody who can guide them for their overall portfolio building.
Yeah.
And as you said, like 50 years, if I want to build my wealth, what do I start doing from today?
Yeah.
And bringing in those exotic opportunities which otherwise are not easily accessible.
Yeah.
And so this is what they're asking, and they don't have answers to this as of now with the current sort of service providers which exist out there. So obviously it's a smaller population which is asking for this now, but we do anticipate that this number will keep rising, and probably that will encourage more of these IFAs to move to a multi-product strategy and bring in these additional layers and start behaving like a wealth manager rather than just an agent for a product. So I think that this could become a reality sooner
I'll
than
tell
we
you
think.
a joke about, when you position yourself as a one product distributor, what happens is that there was a client who had a large amount of money, and he wanted to invest lump sum, and he called the banker and invested to the bank. So the IFA was catering to him. He came to know and went to meet that guy and said, why didn't you give me that business? So the client asked him, but आप तो सिर्फ SIP करते हो ना, लमसम मुझे लमसम करना था तो इसलिए बैंक को दे दिया. So that is that though. So when you do something to such an extent, right, probably that is not good for you. I mean, there are so many other examples of that, right, that you could have done a lump sum versus your clients would have made more money, but you said STP karo. And so you don't be digital, right? You have to look at everything holistically, at all products, and all products have virtue if you do them well and study them. You can pick up things and create let's say, how do you create a meal, right? You pick up the ingredients and you mix them well, it's a great meal. But you can't make a great meal from one ingredient, right?
Correct.
So it's really about that, and I think so they'll learn.
Got it. In terms of investor behavior, and we can talk about any type of investor who you have experience of working with more closely, how do you see that evolving in the recent times, and what do we expect going forward?
So I think so. Even I don't know how many current investors, the numbers keep coming out, 9 crore, 10 crore, whatever, right? How many of them have really seen a bear market, right? And I think so. So it's like it's growing up, right? You grow up when you go through certain experiences, and
True.
it's growing up. They'll have to see, they'll learn. And everybody who is smart today might probably seen 2008 or even 2000 or Harshad Mehta or whatever. So I think so. The lot of these current numbers, these current investors are, they themselves think like what these IFAs sometimes think, like that there's only one asset class which can help them make money, and it's easy to make money, and just invest in stocks or buy this 10 stocks. They think it's very easy. This whole journey of becoming a 42-kilometer, they think it's DIY. I don't think so. And they will learn, I mean, in the hard way. But again, this is not, as a country, probably, financial literacy, don't know where we rank on that, but
Not very highly for
yeah,
sure.
not very high for sure. But this awareness, or this willingness to accept help, right? I need help. I'm not the authority on a
This
lot of
matters.
things, right? And I'll probably pay for it for that. That also is probably a little missing. So till the time people don't realize this, that they need help, they need to listen to somebody who's probably more experienced and smarter than them, that needs to change, I think so. A lot of Indians think everything they can do better than, so they'll go to a dentist and then they'll say, no, nahi, ye Google karke bolenge aisa waisa. Don't try to do everything on your own. There are people who know that better. And so even investors are probably not that experienced, and they will become experienced and they'll become more evolved. But I think the current lot is pretty fresh, new, inexperienced.
Got
So
it.
that will change with experience.
Got it. Got
Yeah.
it. So you mentioned that you are enthusiastic about the multi-product strategy and bringing in innovations, diversifying the portfolio. We are also going to be partnering up pretty soon.
Yeah.
What was the thought process behind that? How did you come to the conclusion that we should do this?
No, so I think so. If you're doing something where uh, clients make 2-3% more money versus a bank, or and everybody wins, right? Somebody whose bills you might be discounting,
Yes.
the customer wins, the distributors win. So I don't think why that should not work, I don't know. But again, there will be some skepticism. In India mein, when you offer higher returns and assured returns, people think this is a scam, which is sad.
Yeah.
Right? But people will learn with experience. They'll be early adopters, they'll talk about it. You do your job well, I think so, and you see what happens. Because debt is a asset class, right?
Yeah.
And within debt there is short term, long term, all kinds of debt. People think debt is meant to be for
Long term.
to be parked, no, to be parked for short term, and the day you get an opportunity, equity, you jump ship, right? It's not like that. You can have debt forever, and you can have debt which is for emergency purposes, short term. So people have all kinds of allocation to debt, right?
Right.
And I think so what you are trying to do is probably create a alternative to what a bank might be doing, where probably customers will not make 4-5% or maybe even lesser, right?
Yeah.
So it's a great thing. I mean, everybody wins, the merchant, the investor, the distributors, you, everybody. It's a win-win-win for everybody. So I don't think why, I have no doubt why it won't work, but it will need a lot of effort because it's new. People are not used to that. There is
Yeah.
no so it early days, but yeah, I think it will work.
No, I think we very strongly believe that debt in India today is where equity was 15 years ago.
Correct.
And it will catch up. It'll take some time. But
Yeah.
the day it starts catching up, it'll actually become much bigger than equity. And
100%.
that's when people will start realizing the value of debt.
Yeah. And I mean, if you have, equity is for creating wealth, right?
Yeah.
And what percentage of your money should be in equity is a very individual answer. And today there are people who believe that if they want regular income, equities are safer than debt because of the euphoria which is there today in equity. So small caps are safer than, let's say, your product. There are people who believe that, right? So that's because they've not seen a time correction, a price correction, or a combination of both.
Yeah.
But debt, whatever debt experience was there in the mutual, some of that is bad precedent, right? There are bad examples,
Right.
triple A bonds defaulting. So there again, it's similar to like what you said, 2003 for the mutual fund industry,
Yeah.
right? Early days. But yeah, there'll be early adopters, people who'll bet on this and learn with smaller amounts, of course.
Yeah.
But great space to be in.
Got it.
Yeah.
So what lies ahead for Funds India? What's your vision now?
I think, I mean, numbers are, I mean, again, you put them for an Excel sheet, that's not what happens. But it's a large country. Uh, People are becoming wealthier, right? Savings and all the numbers that you see, SIP 26,000 crores. It's just the start, I think so. It's the next 20 years. A lot of money will be made in India, and India needs a lot of people who can help this savers
Correct.
to be on the right path. So we want to create that pool of uh, distributors, right, who will help them, guide them, not just in one product but across products. So I would say anything between 300 to 500 branches, 40 50,000 with good quality distributors,
Right.
multi-product, it's in a way not biased towards a
Right.
product or an asset class, right? Do the right thing for the customer. And yeah, that's what we want to create. Somebody who manages somebody's money well and unbiased way.
Correct.
Yeah.
No, I think I completely align with that vision and mission. And there are sadly very few people operating in the wealth space who think about the investor end of the day, right? People are just thinking where is the most margin, what is the fanciest product, but not what the user really wants or needs. And sometimes they don't even know what they need. They just think of something
No, so the
exciting.
difference between a FMCG supermarket and a financial supermarket is that if you walk into a FMCG supermarket, you know what you want to buy.
Yes.
Let's say
Yes.
spices and vegetables, and you walk in with a list.
Correct.
But in financial supermarket, nobody knows what you should buy, what you should not buy. So it's here the distributors are much more relevant, yeah, because of that, because of this sheer number of choices that you have, right? I didn't count the number of insurance companies and their investment products. So it's really chaos. Whatever 20 odd insurance companies, they might have 1,000 products. So the really, if you have, let's say, a crore of rupees, right, or maybe couple of crores, right, your choice is 7,000-8,000 products. And how do you select the best five? You need people who will tell you what to do, right?
Right.
And we'll create those people. But you can't do that at the cost of the customer. You have to do your job well. I mean,
Yeah.
today we went to a restaurant, and it's a very famous restaurant, but the aesthetic is like normal. But the thing about the restaurant is not the aesthetic, right? It's the food. I mean, if
Right.
the food is nice, the aesthetics
else
doesn't
matters.
matter, right? So you do your job well, not these fancy gimmicks of creating a 500-page investment proposal and things like that. You do your job well, explain, help, handhold the customer in this journey of 55 years. If
Yeah.
somebody does that at any margin, they'll make money. This is not
Yeah.
a capital intensive business.
Yes.
You can manage somebody's money. You invest no capital, right? You get a couple of licenses.
Yes.
So, but you have to do your job well. And I think so everybody who has not done that well has suffered. There is a lot of history of that. So you have to be. So sometimes customers themselves don't do the right thing.
Yeah, they don't know what's
So
the right
you
thing.
have to really not bow down to that.
Yeah.
So if you ask somebody why there are 35 mutual fund schemes in somebody's portfolio, though the customer भी ऐसा है यानी वो बोला नहीं नया दो नहीं, so you have to stop. No, you are the coach. Although that guy will not wake up at 5 a.m. So it's your job to
Yeah.
really control how much money they save, where they save, how they allocate. You can't really blame the customers that वो उसने ऐसा बोला, पैसा उसका, it's his money, his or her money, but you can't really do something which is wrong or allow them to do what is wrong. So you have to be a little assertive in that sense, not be really a yes man to your customer, but at the same time. So I think most IFAs don't really think on the brokerage or the revenue. They are client centric. That's naturally ingrained in them. What so institutions are different, right? So institutions are can be that, right? Revenue first, client later. But IFAs are tend to be more client centric. But what sometimes they can't do is be assertive about what they are saying, and then they let clients make mistake. And so you be little assertive, control. It's you manage somebody's money as if it's your money.
Yeah.
And if somebody is not listening to you, you can say, please work with somebody else. This will not work. I can't force you to become a marathoner, right?
Correct.
If you don't listen to me.
Yeah.
So you walk away from that customer, but and don't let people make mistakes at your watch.
Yeah.
Yeah. So you be a little assertive on that. Yeah.
Yeah. I think that's a very good motto for
Yeah.
all IFAs to
Yeah.
take away.
Yeah.
Great. I think this was lovely having this discussion, and I'm sure we can keep going on and on given how excited both of us are about the space.
Yes.
But thanks for taking time out. And any last words before we wrap up?
No, I would. I mean, if you are an IFA trying to build your business, please reach out to us, and we'll help you. We'll explain why we'll do the best job for our customers together. And I mean, with you, we want to, really take this product to as many number of investors, as many distributors as we can, because there's the right time to do this.
Absolutely.
And good days ahead.
Yes.
Yeah.
Thanks a lot. I think this was really great. Thank you everyone for watching. We'll catch you in the next one. Till then, take care and keep investing.